Hello, and welcome back to the Foreclosure Deals Coach podcast. This is the show where we talk to regular investors just like you and help them to find, figure, fund, fix, and flip a foreclosure deal. And this week, we're going to be discussing the Fed's decision yesterday to keep rates steady for one more round. A lot of debate going on what should happen with interest rates, but the Fed decided to hold still. It's going to be a great show. Stay tuned. We got a whole bunch of stuff to discuss today. Stay tuned. Hello, and welcome back to the Foreclosure Deals Coach podcast. I am your host and Foreclosure Deals Coach, Donnie Corum. And once again, if you're new to the show, the Foreclosure Deals Coach show is all about helping people to find, figure, fund, fix, and flip a foreclosure deal in this crazy busy market that we're in right now. We're going to help investors just like you to do deals consistently, where we locate the deal for you, analyze it, fund it, fix it, and flip it with our team agent. If you want to learn more, simply head out to foreclosureprofitsystem.com. You can register for a free consultation call. We'll go over whether or not the system is the right fit for your investment situation and help you to get into a profitable foreclosure flip deal within 30 days or less. Very few systems can offer that level of return that quickly. Learn more about that at foreclosureprofitsystem.com. All right, let's hop in today, guys. Well, as I mentioned, the Fed met yesterday, and they decided they were going to hold rates steady for a little bit longer. And I'd be lying to you if I wasn't annoyed, right? I mean, if I didn't tell you, hey, I'm really frustrated with the way the Fed is acting right now. And I think I speak for most real estate investors right now and real estate people in general when I say that, man, it's getting frustrating for rates to be as high as they are when all these things are heading around. The market's stagnating. We've got days on market going up consistently right now, inventory heading up, buyers uncertain on whether they want to buy right now, sellers losing equity because they can't sell for what the market would believe the property is worth in this market. In my opinion, it's a grade A disaster, but hey, I'm not the one running the country, right? It's not up to me to make this thing work. So the question is what do we do as real estate investors during a time where the Fed continues to increase rates? I want to start with this article here where, Powell kind of discusses his decision here. The central bank is calling for 2 rate cuts this year, but the policymakers, this is where the Fed Reserve kicks in, is seeing higher inflation at this point. And Fed Reserve Chair Jerome Powell is well known, is no friend of our President Trump. They're not really good buddies on this. And they're saying that the tariffs are starting to cause inflation fears. So he's really blaming Trump's tariffs and the system that he's putting in place to do that for the reason to not change rates or start to reduce rates, despite the fact that all sorts of problems are happening in the real estate market right now. The U.S. economy has always defied the forecast. What this goes on to say, it's remarkable to see that despite the fact that, it makes a lot of sense, and we're sacrificing employment and GDP growth and all these things are taking place, the Fed Reserve is holding fast on we're just not going to reduce rates. We're worried about it. Meanwhile, and the reason I really wanted to do this show, because I know it's not that exciting to talk about Federal Reserve rates and things like that, but what is interesting is how there's a huge heat up in the wholesale side of the market. And what do I mean when I say wholesale side of the market? When you think about real estate, especially as a real estate agent, you're often going to think about what's on the MLS, what's listed actively that you can go out right now and purchase, right? That's the retail market. And the retail market is where normal retail consumers go to buy property. They either find it on Zillow or the agent finds it for them, or a number of different ways that you locate property, but that is the retail market. On the wholesale side of the market, we're using a different set of tools and a different algorithm to define what is considered wholesale. In general, wholesale can be defined as properties that are priced significantly below market, usually in disrepair, are often in foreclosure, right? Or different areas where people are looking to find deals. And a lot of people don't understand there's a distinct difference between those two marketplaces. Whereas the wholesale market is accessible to everybody, it's harder to find. The retail market, everybody knows where it is. You can go onto Redfin, other websites, and see what's going on. Well, I want to show you real quickly what's going on in the retail market and the wholesale market, excuse me, on a retail site. Because although I use other tools like PropStream and Privy, because a lot of people don't have access to that or don't want to pay for that out of the gate, I'm going to show you what's happening in the wholesale market by using some of the retail tools, so you can go out and compare this to what's happening in your market right now. What we're looking for is stuff that's priced significantly, excuse me, significantly below market that we might want to buy. And what I really care about, excuse me, is what's happening in the retail market around that. So what are people buying right now? That's in essence what we want to find out. Are we seeing a lot of retail trades? We already know that's not the case. But really what we're looking for is what's happening in the marketplace in that area. So I'm going to pop my screen up here, and I'm on Redfin right now, and I'm using 85251 because we just bought a flip on Mitchell Drive in Scottsdale, 85251. And I want to see what's happening recently, right? What has sold in the recent market? And right now, when I bring up I just got it selected to show me single family homes. I'm not so much worried about bedrooms and bath counts right now because I'm not trying to do a property analysis. I'm looking at the market overall. Okay. So we're going to look at everything that's sold in the last 30 days in 85251. And this was data that was really hard for the consumer to access in previous years. Normally, getting access to sold data required an MLS login, and MLS login largely required getting a real estate license, right? Today, there are consumer grade tools like Redfin, like PropStream, like Privy, where you can look at the market and find these wholesale deals directly on the retail market. The world has changed a little bit. I will argue it's still easier to find these deals with the professional investor tools, which is kind of obvious, but it is doable. So I'm going to walk you through the process of finding them right here on Redfin, which you can just load yourself. And I would advise you, go ahead and put your zip code in, right? And then do a filter, as I did, on what's sold. This is right at the top. You hit the sold button, as you can see there. Generally, we don't care about price range, but you might want to filter the price range if you got a large range of prices in your particular zip code. Again, we're not going to worry about bedrooms and bath counts. We are going to go down by property type. I'm in a house, so we're going to do house, but I was in a townhouse or a condo. I would click on that. I want to see in the last month, but what's fun about this, you can go to the last week. Zillow will even let you go to 2 weeks, etc. I just prefer Redfin for usability purposes. You might want to filter by square footage a little bit to take out some of the data. We're not going to do that because there's only 31 homes, but we might go, this house is 1,700 square feet. So I might want to see a range right above and right below if I was trying to get a valuation of this property. But because I'm looking at the market as a whole, I just kind of want to see what's going on in my market. Garage, air conditioning, doesn't have a pool, etc. This is stuff we're not looking at because we're getting a market view. And 31 homes come up that is sold in the past 30 days in this zip code. This one is 1,482 square feet. Now, some pure market analysis would tell me that my property is worth about $800,000 to $850,000. Okay, so stuff that is selling at about 1,700 square feet for $600,000, that's a deal, right? If you're getting something that you know the market will sustain 800 grand and its price of the 600s, that's probably a deal. Now, what we don't know right on the surface, how much work is required, and sometimes that can throw us out of deal range. But generally speaking, most of the time, if you figure a $30 to $30 a square foot remodel budget, 1,500 square feet like this one should cost about $45,000 to $50,000 to get into, not high spec, but in good shape, right? So this is priced well below market. It sold on June 13th, so literally just a few days ago, 6 days ago, for $625,000. It's on the same street that I'm located on. And what makes me really nervous about this as a retail seller entering the market is this is not in bad shape, is it? Look at this, 1,400 square feet for $625. This is very similar to the cabinets we're putting into the Mitchell property. So that makes, that means that it's nicely interior design. You can tell it's been staged. It's a very pretty property. They didn't do all of it. The tile could use a little bit of work. This was furnished, so it tells me that it was probably an Airbnb. It does, in fact, have a pool. And, you always have times where people sell significantly below market because we don't know their motivation. But, man, this is a good deal. Like, if I had seen this before it sold, I probably would have considered buying this at $625 based on the fact that 1,482 square feet could be worth easily in the $750 range. And this is definitely in good shape. So that's a good deal, right? And that's what I'm saying. You still see a lot of activity in the wholesale market. Here we are, 700K for 2350 square feet. Now I want to just give you an idea on what 2350 square feet could sell for in a typical market. And you guys are not looking at this screen, so let me I'm going to de-share here, stop screen share, and then I'm going to reshare with this new tab on Coolidge, which is the next one that we found. All right, so here we are on a property on Coolidge, 2,300 square feet. Okay, they listed, as you can see here, for $739. They went under contract in 4 days because I'm not the only one who thought it was a good deal. That deal fell apart 6 days later. Maybe financing fell through. The buyer found something they didn't like. We don't know the story there. Went under contract the day after, okay, and then closed about a month later, which is pretty typical for underwriting and whatnot, at 700K. But 2,350 square feet in this neighborhood is worth a great deal more than that number. Here's one on Montecito, that's 2,100 square feet. That's listed at 970. They haven't gotten it yet, mind you, but that gives you an idea. Here's one at 2040 square feet that's listed at $1.3 million, another one at $1.2 million, et cetera, et cetera, et cetera. So when I see something that's going for this cheap, 700K with that much square footage in this neighborhood, my instinct is going to tell me that, man, this is probably a great opportunity. Here's one on Coolidge, 2,200 square feet that Redfin estimates at 943. We can't always use the AI for estimates, but we can look at what's sold in the area to get a real feel for what is going for. And tip top properties are selling for $1 million and up in this exact same zip code. Now, neighborhoods do change. Dynamics change in the market. You're not necessarily going to find an exact match. We call that a model match comp. But even Redfin is saying that this property could be worth up to 862. And again, I wouldn't tend to believe that. I've got comps that go much higher than that. Now we look at the condition of it, and the cabinets leave some to be desired. The backsplash, a little bit dated. It's the brown theme, which was super popular in a certain era, but has gone out of vogue. We're more in the white, the crisp whites, and the lighter grays is more in right now. This does not have a pool. Okay, and some of the bigger range properties have a pool. We could certainly add a pool. It's got the yard space for it, but that's not usually our scope of work as a flipper. It's got a nice covered patio on it though, which is a nice feature, and etc. So 700 grand was a deal. As I promised you guys, what I am seeing right now, and this is just two comps, right? Here's another one, 4.6 million. That was probably not a deal, right? We don't know, but probably not. Here's one that went for $1,025,000 that seems more retail, and it's very similar to square footage of the last one I just showed you. 850, very similar square foot floor plan, but most of the comps, I looked through the 30 of these, are going to be priced a little bit below what I believe they're worth. And that's what we're seeing right now because rates are high. My opinion on this is that the reason why we're looking through that lens right now is because the investors are seeing a future where rates are going to come down or market demand is going to creep up despite the rates, because buyer demand doesn't actually go away. It does falter at times, when rates are high like they are right now. But ultimately, buyer demand is a constant. People are always upgrading homes. They're always moving to new areas. Scottsdale has a lot of new area activity right now. I'm doing well, Allison. Thanks for asking, and thanks for tuning in. I really appreciate it. The market is in a constant state of flux right now, and so we are dealing with that. But the investors in the marketplace are seeing that opportunity and realizing that, boy, if these houses were trading at $1 million a few months ago or even a year ago, and now we're buying them in a $700,000-$800,000 bracket, those were great opportunities that one day in the relatively, hopefully near future, are going to go back up to that range again. The problem is my crystal ball is broken, just like yours probably is. We don't know when that's going to happen. And then there's a general mindset that things could actually get worse if rates continue to stay high. And so can property values go deeper than they are right now? Can they continue to fall? The answer is we ultimately don't know, but the belief for the optimistic investor who has to operate from a position of optimism just to be in this market. Listen, if you don't have a certain degree of risk tolerance, right? If you're not the type of person who can see the positive positivity, you shouldn't be investing at all, right? You're usually looking at things as negative. So it doesn't make any sense for you to put your money behind something you don't believe in. And that's what most people don't ever get to real estate investing, because they operate from pessimism. We do the opposite. And it's easy to have that optimism if you've made literally millions of dollars flipping properties. I've done 400 flips in my career, netting millions of dollars along the way. I wish I could tell you I'm still sitting on millions of dollars, but because this market cycles up and it cycles down, we had some incredible boom years where we made a ton of money, and we had some bad years where we gave a lot of money back to the market in the form of lost equity, houses we couldn't sell when the rates went way up in 22, and a series of other things that kind of took place when the market corrected. The question on everybody's mind is the correction over? Well, in my opinion, and obviously opinions are like, and everybody has one, right? So my opinion only matters as much as you want to value it. But in my opinion, we are nearing the tail end of the real estate correction. We're not starting it. You notice the press is talking about it a great deal more. The housing market is correcting and things are going to get bad. And you've got guys, on YouTube who make their whole business on the sky is falling Chicken Little theory that things are going to get worse from here. But in my opinion, I think we are nearing the bottom, and I'm not alone in that thought process. If you look at the wholesale market and some of the deals that are coming onto the market right now and selling relatively fast by investors mostly who are willing to buy a house, fix it up, and bring it back to market. And that's generally the case with when you see these properties that need work, they're a little bit dated and they still sell. And that's the majority of the sales that we saw in the last 30 days in this zip code are, in my opinion, drastically underpriced, because they're either going to investors or they're going to investor-minded buyers who don't mind putting the money into it to get to a higher value later on. This is not the case in a pure retail market. So the market is definitely leaning towards wholesale, and there are a ton of opportunities in the marketplace right now. So in the foreclosure profit system, I help people to find these deals. I help people to analyze the deals in our figure stage. I help to fund them because I'm a hard money broker who can help you to locate financing on the deal. I fix the deal with my construction crews, and then I help to flip the deal with my team agent who lists it for a substantial discount below what you can get a normal retail agent to list at, all allowing for a net profit return to the investor who decides to do this deal. There are a lot of investors coming to market, but a lot of people who want to get started in here don't know where to find these deals. They're nervous about the construction process. They're not sure about the funding. The foreclosure profit system solves all of that and allows people to get in the market. But there is a catch. And the catch is that because things are a little bit slower, once we get the work done on the property, it stands to reason that days on market is going to be a little bit higher than it has been in the past. For some investors, that's too much risk for them and they can't take that on. For others who go in knowing that their days on market is going to be a little bit higher, it isn't so bad because they are aware of it, they plan for it. I want to show you the Reventure app, which is one of my favorite apps to study market data like this. And here we are in the Reventure app. And right now, the days on market in Scottsdale, where this property we are working on right now is currently running at 71 days on market. The days on market growth is actually heading down 15% lower than it was last year. So when things are looking like they're improving. Now, this is, of course, the optimism talking, and I don't know for certain that's going to be the case. But if you just look at this one particular zip code and several of the zip codes around it, look at 85257 just to the south of us. Days on market has dropped 28.9%. Okay, it's down to 52 days on market, which is a 28.9% decrease from where it was this time last year. So the signs say not that we're heading into a worse market than we've been in for years, but rather that at least on days on market, things have turned the corner. Now, we were hoping that corner turn was going to be the direct result of a rate decrease and buyers were going to flood back into the market. But what I'm really seeing, since the rate decreases are not happening, is that there's kind of an enough is enough attitude. People who are looking to buy a property are like, it's not going to get any cheaper. We need to accept that it's not going to get any lower. We're just going to buy something now, deal with the higher interest rates for as long as it takes the Fed to figure this thing out, and then we'll refinance later. But if we're going to go that route, we need to buy something below market because there's a cost to refinance, right? And when you're refinancing, you ideally want to show equity in the property because it's going to get you a better rate and better terms if you have equity in the home. So if you're buying something today at a higher interest rate, 7% at $625,000, like we just saw that property went for, and you know it's worth $800,000, you are already at a really powerful loan to value on that property, and thus it's more appetizing to the lender to give you a loan on it, better terms, better interest rates, all of that. It's a good play for people who understand the market dynamics as they are. The other side of it is a lot of people are just going to wait for things to correct, they're going to wait for things to get better, but the amount of time it could take you to get things better, you could do 2 or 3 deals, right? You could make $50,000 to $100,000 a deal if you're looking at Scottsdale prices. My average profit for my clients on very entry-level deals, about $25,000 a deal is what we're targeting per deal, but you can make a lot more in these upper end markets where the gap and spread is much wider today, and that is why I am telling people to buy the entry-level product that never done anything before, but we are definitely looking at these upper end homes because the gaps are wider. People don't necessarily want to do the work if they're not investor minded, so the retail market's not interested, and the retail market in general is not moving as fast as it used to, so you have to be prepared to sit in that house for a little bit longer and wait for retail to catch up. But if you build a nice product, if you have a nice product out there that you can put into the universe, then what we're seeing is they are selling, albeit they're taking a little bit longer. In my experience, our remodels, our flips they're selling at about 50% of the average days on market for the area. Why? Because they're more high in demand, right? It's still taking longer than it has in very many years, but because of these are nice properties that look really nice, people are more likely to want to buy a nice home, right, in a nice area. So that is helping us quite a bit to get deals done. It's still longer than we want to wait for sure, but it is definitely showing signs that if it's improved and it looks good, somebody's going to come along a little bit sooner than they might have come along if the house was in, dated condition and not updated. People don't want to spend that. So it's less days on market, but it's still longer than we want it to be. And the signs are pointing that from last year to this year, the days of market is coming down. So my advice to you is try to ignore the pundits right now who are telling you the sky is falling, okay? I'm not saying there's not difficulties in the market, and I'm not saying that all markets are operating effectively right now. I'm saying that at least in certain markets, and specifically in the markets that I'm studying with the foreclosure profit system, which are Colorado Springs, Colorado, and South, and the Scottsdale, Arizona, most of the Phoenix region, the Phoenix Metro District, right? We are seeing pockets where we're getting a reduction in days on market, resulting in people starting to come back to market despite the interest rates staying high. Do I wish that Powell and the Fed had decided to cut the rates this time around? I certainly do, but they did leave it with the caveat that the intention is that they're going to have 2 rate drops this year yet. Okay. So really this just kind of comes down to a pissing match between Powell. He's arguing about the tariffs that Trump has put into place, and he really wants to make life difficult because Powell and Trump are just not buddies. It's unfortunate when a personal spat between 2 guys has this large of an economic impact, but that's the benefit if you are in a power position like Powell and Trump are to being a guy like that, is if you want to be a jerk, you have the power to do so for as long as you want to in most cases. The economy is struggling. The real estate market is struggling. Jobs are being lost. Companies are cutting staff. All these things are taking place in the market. The solution is largely just to reduce rates. But until they do so, we've got to study the market, not for what it could be down the road and not based on the fear that the market is crashing, but by using tools that can provide actual market data, giving investors like you the confidence to pull the trigger in this very volatile market and still be able to make money, because you make your money when you buy. You realize that gain when you sell the property, but it really starts at purchasing the home, getting the remodel done, and getting it back on the market. Now you're prone to market exposure, and that's where the risk kind of kicks in, because we don't know when it's going to sell. We just know it is going to sell, and we can look at the days on market analysis and say approximately when the property should sell. The stats don't lie, okay? Numbers don't lie, and the numbers are reflecting some improvement in the days on market in certain areas. We are definitely looking to buy in areas where that is the case, and if it's not showing that signs of improvement, we're not going to buy in that zone right now. My job as your coach is to make sure I put you in the right deal. It's going to be super profitable, and that's largely because I want you to come back and do another deal. We've got the tools, the data, and the knowledge to keep you out of harm's way on your real estate investment. With that, that's our show for today. If you'd like to learn more and get started in foreclosure investing while the getting is good, and there's so many opportunities in the market today, reach out to me at foreclosureprofitsystem.com. Register for a free group call. We hop on the phone. I tell you about the whole opportunity in detail. And then we're going to do a one-on-one call to determine if this is the right fit for your investing situation. Real estate investing is definitely not for everybody. You need to have a certain amount of capital, about $50,000 of liquid funds. You need to have a risk tolerance that's aligned with it. And you need to be comfortable with taking direction from a top-notch team of professionals who have flipped over 400 houses individually just for me. But when you combine my team, we're talking about over 1,000 houses between all of us. We know a lot about this process, and we can certainly help you to navigate the waters of the market even as it sits today. With that, this is Donnie Corum, your foreclosure deals coach and founder of the Foreclosure Profit System, thanking you so much for tuning in each and every single week to the Foreclosure Deals Coach podcast, and reminding you now and always, don't buy a house, buy